Hey guys, welcome to another video brought to you by Total Control Traders. In today's weekend video, we are going to be doing market deep dive alongside hottest tickers. All right, first of all, wanted to take a moment to congratulate all market bulls. We closed at all-time high. New all-time high, and the volume, the momentum really racked up towards the end of day. So congrats, market bulls. For those of you that watched the video yesterday, you would have already known that I went all in yesterday, anticipating on this break for the market to go into new all-time highs. One thing to note, market has been extremely generous since November. So make sure to keep those emotions in check. Again, we are not in the market to call the tops or the bottoms. Our sole purpose for participating in the market is to make money. And remember that. Every so often, there will be moments in your trading career where your predictions based on your technical analysis just seem to be working out perfectly time after time. Understand that these moments will not last. Because the moment that you start to get comfortable and start loosening up, market will humble you. But at times when things are happening as you predicted, make sure to take full advantage of it. Especially if your account is already in breakout mode. Same as if you were playing momentum stocks. Make sure you know where the breaking point of your thesis is. And don't be afraid to go in. If your account is already at new all-time highs, you're obviously doing something right. So make sure to keep at it. I am swinging full bull position into Tuesday as well. I trimmed some positions in the pre-market this morning, just the positions that weren't looking so strong versus the market, such as NVDA. You know, we ran quite a bit, and we'll get into the NVDA chart after the market deep dive. We've ran quite a bit, anticipating a little bit of a sideways action, so took some positions off, but will be going back to full sizing on NVIDIA. Anyways, let's get into the market deep dive. First one, we'll start the same as usual. SPX. All right, so early this morning, pre-market, we saw yet another dip. And last night, I didn't get much sleep. It's one of the rare occasions. It's been a while since I swung full position plus more into the market. And based on what's been happening in the market and how my anticipated moves have been playing out, I was comfortable swinging full sizing into today, and now even more comfortable swinging into Tuesday. But it's been a while, and you know, regardless of the situation of how comfortable you are, when you swing full sizing overnight, it's always gonna be a little bit of worrisome, especially if you just so happen to be up at 1 o'clock and you see that kind of red candle closing under the first already closed under that key trend line. That was a little bit of a scary moment, a little bit, not gonna lie. But I want to show you guys something here. Which one is it? Give me one sec. Oh yeah, this one. All right, so this is our Slack chat group. And what gave me so much confidence was, aside from the fact that my accounts are in blue sky all-time high breakout mode, when I look back yesterday before deciding to swing full bull position, was we began as our trading community, we began to anticipate a pullback towards the end of January, and that was partially due to the run that we've had for 60 straight trading days. And I mentioned that in my video quite a few times. We will be looking at a pullback. No, this is the hourly chart. Yeah, going into here, we will be looking for a pullback. Then market extremely nice. My anticipation was we will be seeing a pullback before the end of January towards this as we made way to this one-to-one extension target. And one of the main reasons for that is RSP season is extremely strong. January, February is an extremely strong month as we are seeing right now. However, with the market that's already ran 60 days, in order for the market to continue to be bullish and continue its trend of extremely strong Februaries, we will be needing a significant pullback. That was my thought process. And market, it just so happened, one of those moments where it really worked out. Right towards the end of January, it had a huge pullback. Then from there, well, not a huge pullback, but this was what, 5.3%. Then from there, we got straight bought up, held the GP. That was the moment that it gave me full bull confidence. From there, I've been slowly sizing up. Well, quickly sizing up. And as the market made new all-time high, anticipating that this one-to-one extension, the next one-to-one extension target was the stall zone. And we did see a stall here. So that was the second time that anticipation came to fruition. Then from there, as we saw a stall, what my message to the community was anticipate a sideways bull flag setup. That would be the most ideal into the next leg up, breaking to new all-time highs. So we anticipated a slight rejection, one-to-one extension target 39.27 last Thursday. Upon the pullback, upon the break of previous all-time high, which played out perfectly this Wednesday. Then the third one that we anticipated was a healthy consolidation, forming daily bull flag into new all-time high, ideally today or Friday and Monday. That was the anticipation, and it came out perfectly too. So with that being on play and account being in all-time high breakouts, we'll be taking full advantage of this. Now from here, what is our next target? If you've watched some of the videos, you would know that ultimately I am looking at 40.90. I've been saying that number quite often lately. 40.90 is the ultimate target before we see the next significant pullback, and anticipate that it will take some time to get there. We're about halfway through. Well, Monday is a holiday, so we are halfway through February, basically. From here, there's 2 weeks left in February, 10 trading days. Looking at that 3.8% move within the next 15 trading days. Most ideal case would be within the next 15 trading days. If it does happen within the next 15 trading days, I will be exiting most of my positions, anticipating a decent pullback. From here, reason for that is you gotta think of the daily 8. Always keep the daily 8 in mind. The message that I sent out to the group this morning was two possible scenarios. One, wedge break bull and drag the daily 8 along upwards to touch the lower wick and form, or that we had formed in the pre-market. Two, second possible scenario, wedge break bear and touch the daily 8. So me being full bull sizing, I was anticipating first scenario, which we saw during the day, early in the day. We were right about that 1-to-1, and the 8 EMA was down here. So we have not touched that 8 EMA. But towards the end of the day, we dragged it up. So that worked out perfectly. From here, if we were to run next 15 days with healthy higher lows, even if that was the case, we will be looking at getting pretty extended from the daily 8, not to mention fairly extended from the weekly 8. Let's just take a look at this. Yeah, we're already starting to get extended on the weekly 8. So given another one, yeah, if we run for the next 2 weeks towards the end of February, we will be extended from the daily 8, the weekly 8. Keep that in mind. Know your sizing. Know when to go full sizing. Know when to be conservative. After this run, I will be looking at taking it easy. Wait for the consolidation to play out. Potentially playing some bears or even start picking up some hedges. Because of the way we have ran, how long is this? Now about 15 weeks straight with one higher low that was set on that pullback end of January. So we'll be expecting on the next pullback will be the significant one. Anyways, that's the run through on SPX. Everything played out. The wedge broke bull, and the end of day from 12:15 all the way till the end of day of 2 o'clock. This gives me full confidence. Look at the bull volume that came in the last hour of the day, and the last, what is this, 120? Okay, last 2 hours, roughly about last 2 hours. Last 2 hours alone, we ran 0.61%. Full bull confidence. All right, next, NAS. Seem to be having leg problem. NAS, same idea, all-time high. Dragging the daily 8 up. Ever so slightly missing it. This low was 13,655 and the ADMA is at 13,647. So ever so slightly missed the ADMA, but upon, so little bit of a concern, but not really. Look at this close, all-time high. And by the way, when I stayed up last night, I spent quite a bit of time developing one of the courses, which will be focusing on what kind of candlesticks these are. This is considered a a bull continuation candlestick. So I can't remember what it's called, but we'll be looking at continuation going into Tuesday. Next, Dow. Same idea, didn't touch the 8, but we did not make new all-time high on the Dow yet. So that is noticeable, but we did have the all-time high close. Closing higher than the previous 2 days. This is the highest that Dow has closed on. So we'll still be looking at continuation on Dow going into Tuesday as well. US 10-year over 2-year still trending up. The 88 is the guide. We have not closed down under it ever since January 28th. Giving bull even further confidence. I think we're at all-time high now. Nope. We're close to that all-time high. All-time high on the US 10-year over 2-year bond yield rates is at 13,117. So we're coming up to it. VIX. The lowest close we've had since the pandemic time. That is very notable. VIX closed under 20. The first time VIX closed under 20. This provides further bull confidence. From here, we'll be looking at a potential downward break. That would be interesting. If we do break downward, I would imagine that there's going to be a bounce on the VIX. Because you look back, most of the wedges don't get a break downwards, a break under. There's been some wicks, but wedges tend to hold their lower trend line on VIX. So if we do break down under, I would consider picking up some hedges or trimming bull positions. Something to keep in mind. Look at this. We came down, touched the lower trend line, bounced up. Keep a close eye on VIX. Even if you were to start hedging right now, still a good idea. Potentially a good idea. I would say maybe Tuesday or Wednesday. I want to see that follow through on the bull movement on Tuesday, so likely Wednesday. Gold, still in the channel. Nothing notable. Silver, slight uptick, holding that 88. Right now, the 88 is serving as support. Gonna want to see a break of this trend line Tuesday. US dollars, this morning it was trending up, and this was the other cause of my sleepless night. From here, we rejected from the key resistance support zone, which is now more notable over there. Rejection, and now we're looking at a potential of head and shoulders formation. US dollar looking bearish. US oil looking bullish. The 88 right now is serving as a guide. We have bounced from the 88, and you can see is grind up. Even if we were to close under it, you know, next day it gets bought up. So if you're playing oil, maybe measure the how far we tend to close under. Let's see, that's about 2% under. This one is 1%. So if you're playing US oil, recommendation, use the 88 as your guide, but maybe set the stop somewhere around like 2 to 3% below the 88. That would be a little bit easier, give it a little bit room. If you are playing US oil, ideally you would have already been green. We're at the 52-week high close, already coming up to pre-pandemic highs. So risk to reward is not so much worth. It's not that good anymore playing oil up here. But there are oil companies out there that are still undervalued, so maybe look into those instead of playing oil directly. All right, that's it for the market overall. Bullish. Think about using a hedge once we break under this trend line. We'd be looking at it. First thing, Tuesday would be a follow through in the market bull. Then Wednesday, potentially looking at a hedge. And yeah, that's it for the market deep dive. Hottest tickers. Next is Bitcoin. This is a nice setup. Now it's not ideal for follow through wise. We had a bull flag setup that finally broke bull on the news of Elon Musk buying. But from there, we've just been grinding along this upper trend line of the channel, which is drawn incorrectly, it seems. Yeah, it'd be something more like that. So now we're in the sideways action. 4 out 8 as your guide. Have not closed under. Lots of wicks both sides. From there is, pay attention to the volume. Anticipation is further upside. It's kind of nice that we're taking a pause here, to be honest, because you want to look at the RSI. So this was or oscillators, whichever one you're using doesn't have to be RSI. This was a bear divergence. So we're slowly playing it out, but with the amount that we're pulling back and not losing 4 out of 8, the chart is very strong. Next leg up would be the break. All right, next is Tesla. Tesla will forever remain on the chart. Today, I got in the morning, upon the break under of this lower trend line, I sort of just said, you know what, I gotta cut some positions. So I cut one of my Teslas, well, half of it, but no FOMO. It was the right move to play. Next candle would have been the re-entry, if you think about it, but it was lower bull volume. Would have been the re-entry because we got bought back up right away. It was lower bull volume, so it was a little bit hard. It's always going to be a little bit hard to read volumes in the morning. because that second candlestick is always going to be lower than the first one. But yeah, didn't see a notable volume here. Then we started seeing a rejection at this lower trend line. So I just said, you know what, I'm going to let it go until this upper trend line breaks. Yeah, until this upper trend line breaks, probably going to avoid adding back the ad that I sold this morning. Chart is still looking choppy, but we did on the daily hold that lower wedge, lower trend line of the wedge. Anticipating further sideways action. 1, 2, gonna need a third touch and then a third touch on the bottom. So a break will likely be getting closer to the apex towards March. Yeah, if you're in options, you don't want to be taking that time decay all the way sideways. All right, next is Amazon. And what do we see? We added positions yesterday on Amazon. It was, no, that's today. Towards somewhere here. 1, 2, yeah, one of these two candles. Then from there, gave us a little bit of hope on volume towards the end of day. Then today, this morning, we got shot down. This was a little bit scary, but I had faith in Amazon play. The setup was so similar to, it's so similar to NVIDIA. And going into the play, the breaking point of the bull thesis was a loss of this GP, previous low, 31.87. So as long as that held, I was not going to be selling out. And we came down to 32.33, the low of today. From there, we saw a 30-minute trend change right here, 10:30. Then we sort of went sideways on slight increasing bull volume, broke the wedge towards the end of day. Bulls came in. Look at this volume towards the end of day. That last 5-minute candle, it's telling me something. It's the highest 5-minute candle bull volume that we have had since pre-earnings. Yeah, since pre-earnings. Earnings was this day. This is pre-earnings. So this is giving me confirmation in this play. From here, I want to see 30 minutes set or higher low after a pull away from this 30-minute 8. Ideally, we come back to this upper trend line of the longer term wedge before a slight rejection, forming a bull flag from their bull break. Chart is looking nice, just missing that follow through now. Next, NVIDIA. Trimmed some positions this morning. We did make new all-time high, but if you look closely, there was a very clear bear divergence. Very clear bear divergence that is now potentially corrected already. 40 some, yeah. It could be potentially corrected already. From here, hourly, we are looking at RSI of 55. RSI is coming down fast. What does that mean? This chart is going to go very soon. 4 hour, still near that overbought, but we touched the 4 hour 8 and bounced straight from there. 8 hours still extended from the 8 hour 8. Daily 8 catching up. Expect a hold of this 589.07, previous all-time high. Ideally, what we see, bull flag, that is the anticipation, then next leg up. Remember, this was a long-term sideways action since July. This move is going to be big. It is going to be long, and it is going to be very profitable. So keep at it. Still have my common shares. We'll be adding options back. All right, next, NIO. Give it time though. Give it time, I say probably till Tuesday, Wednesday-ish. Maybe even Thursday. All right, NIO, nice hold of this lower trend line or upper trend line. And held the 88. From here, we want to see that reversal. Decrease in bear volume is looking nice. Tuesday is key. We're going to need to see that reversal into bull momentum, breaking the previous lower high to confirm a daily trend change to the higher high. Looking good. Overall bullish on NIO. Last but not least, the baby that's been paying us, Zoom. All right, Zoom, 4 hour head and shoulders played out, seeing a stall on key resistance zone, unable to close over it, wicked over it, but unable to close over it. The 88 is now catching up. Chart is looking great. Decreasing volume is starting to set for the next leg up for this daily inverse head and shoulder continuation. From here, anticipation is continuation in Tuesday, Wednesday-ish. Yeah, ideally see a continuation into Tuesday. Added to the position today, we'll be looking at taking off the ad at the gap fill of 460. Overall, bullish on NVIDIA. All right, that's it for today's video. Hope you guys enjoy the content. If you're looking to get out of debt or build that first pot of gold, make sure to hit the like and subscribe button in order to get updates on our videos daily. Also, check out our website at totalcontroltraders.com. We currently have a trial to subscription conversion rate of 100%. Very proud to say that, as well as proven track record of 80% plus successful calls. Give it a try. We have free 7-day trial available, and there is a limited quantity on them. Anyways, hope you guys stay safe, be in control, enjoy your long weekend, enjoy the gains you've had if you had taken any profits off. And thanks for watching, guys. I will see you guys in the next video.